Volatility is rising. The dollar index is pushing higher from its bottom, and TLT just made a major technical move. But what does it mean for yields? Commodities are in focus. Oil is sliding, natural gas is at a decision point, and gold just hit an all-time high but is dangerously overbought. Meanwhile, the broader market is sending mixed signals. We are breaking down the S&P 500, Russell, and Nasdaq from multiple angles, assessing both short-term moves and long-term trajectories for S&P and Russell. Plus, with sector closures tomorrow, key weekly trends are at stake. And for today's special features, Amazon, time for a little rally or not? Alibaba, is a reversal brewing? Are we heading for a major market shift or just another round of noise before the next move? Drop your thoughts in the comments. Let's dive into the charts and track the next big moves. And as usual, we start with volatility. Honestly, I was surprised today because after yesterday's big tower top here and a confirmation of Harami on the futures, I would expect it to go down today. However, it tried not to, and these candles that it formed, technically they could even cancel this formation that the volatility index formed yesterday. And this is a big concern because it tells about internal trends of the volatility index and its willingness to move towards higher highs. And if we look at the bigger candles, for example, like a 3-day candle, we can see that volatility formed a gravestone doji here, and in a normal course of action, it would be normal to expect it to try to negate it. But for how long? Whether it's going to be 2, 3, or 5 more candles upward until it finally understands that it's failing and starts to move lower, this is something that we don't know. And we can only estimate here. If we look at the weekly frame right now, which is closing tomorrow, what we are seeing here are rather neutral candles. They could become bearish ones if there is a move down tomorrow, but I would say that the chances for both directions are fairly equal. So tomorrow is the key day for volatility from the weekly perspective. Now let's have a look at the other instruments. What we are talking about is dollar index. First of all, I would like to say that dollar technically is very close to forming a bottom on the 12-hour frame. And so far, it is trying hard to form the same on the daily frame, but for that, it needs to close above this level, 103.923. Technically, it's possible even today. There are still 2 hours. We'll see how it closes. But if it fails, then I would expect maybe another lower low in the next couple of days, and then we have a rally. That's the perspective. And if we look at the Elliott wave chart that we discussed just a few days ago, potentially this is already an impulse, at least the beginning of it. The first wave was impulsive, then we have a complex ABC for wave 2, and now dollar is forming another impulse. If it completes this one somewhere here in the green rectangle, as with wave 5, then it would be a very significant move and we would be expecting a much higher prices. So that's it for the dollar. Now let's have a look at TLT and bonds. What we have here is a big move early today, when the candle were green, and now they push down with the red ones. Although I'd like to say that none of them technically confirmed a reversal, and just after a fresh bullish confirmation, we would need at least one more day and to see where it is moving, and we would need to understand the momentum. So far, it is unclear and I would say that these are neutral at the moment. And if you look at the frame, so I would say that this wave probably is not gonna make it as a three wave, as a five wave structure, because this wave is not exactly right now looking as a wave three. But still, there are chances, and we might see either lower low and then another fresh start, or continuation here. So both paths remain on the table. Now let's have a look at TLT. TLT today made a grave mistake. So it technically breached this level 89.68 and made tons of overlaps here, which are finally negated all potential impulses. And I already removed the green one and the blue one. Earlier today, I posted a big video on TLT and yields, specifically discussing this situation. So if you're interested, you can review it on our channel. So what is happening right now that we have a clear corrective wave? The question is how it closes, how it completes. There are multiple potential paths here, and what is one thing in common for all these paths, that I would expect TLT to go to a lower low below 84.85. So this move needs to happen in order to reset the corrective structure of the wave. And whether it makes an alternative A here slightly higher, or makes a purple A, B, C, let me show it here. So like A, B, C formation and then moving down, or it goes directly as an impulse downward, all are on the table. At this point, we are just almost know that the move downward is expected one way or the other. And from the candles perspective, it was a very big red candle today, but it reversed here, and tomorrow I would expect a move higher after this bullish engulfing. So whether it makes a bigger move and challenges another higher high, we don't know. But so far, the odds for tomorrow are bullish. And if we look at the 2-day frame, which also closed today, it's not exactly a bullish formation. So it's a thrusting line, which is viewed as a bearish continuation candle. And as I already discussed in the previous video, this would be a key. The weekly closure tomorrow would be a key to understand where TLT is moving. We know at this moment, if it breaks below 89.26 and closes below this line, it will be a bearish move, and we should expect lower lows. That's the perspectives for the treasuries, bonds, and yields. Now let's move on to our commodities section, and we start with oil. Yesterday we discussed that oil, at the very end of the day, it failed to form a bottom. It needed to close above this green line in order to make it, but in the closing minutes it was pushed down, and I view this moment as a significant one. And as a result, yes, we see today we have a bearish engulfing, and the chances for oil to continue lower are fairly significant. So that the 2-day frame, which is closing today, it's going to be rather neutral bearish, and the weekly frame, well, it needs over a 6% rally tomorrow in order to cancel this red candle. It's possible, but probability of it is very low. And speaking about the chart, so it remains unchanged technically. March 13. Oh, we are a forward-looking service. Well, this is the chart that we shared yesterday with our subscribers late night, and it remains unchanged practically. So oil hit this target, and I'm looking as a potential wave 3, 4 here with wave 5 here. However, we might also consider a possible wave 3 is not is not complete. Some technical indicators say that there are chances that oil hasn't finished wave 3. Well, that's the perspective for oil. Now let's have a look at natural gas. Again, this is the chart that we discussed yesterday, and I was talking about that we need to see at least one lower low in order to make a reset here. So far, this wave ABC, if we consider this as a zigzag type, then it's most likely an ideal from Fibonacci perspective, and it could be the end of it. If we look at this wave particularly of the bottom, it is impulsive. So there is a chance that natural gas will start forming an impulse up. And this would be something like this. Well, that's the perspective. If we see a confirmation tomorrow, and we need to have a very strong candle formations. So far, these candles are not bullish. That's an attempt, and I would say that this candle is more bearish than bullish, especially if we consider technical elements. Then I would expect maybe a little lower here and the move down. However, there is also a chance that this candle is up, confirmed tomorrow, and we might see another spike in price. And then again, another critical moment tomorrow for natural gas, it's a weekly closure. So far, this candle is neutral, bullish, but if it goes lower, it might become bearish. Let's monitor it tomorrow. And now let's move on for the one for oh, where's my gold? This is gold. Right, so today we had a very strong move, and if, well, it is closing like this today, and from the perspective of candles, this move was bullish. However, I'd like to emphasize that on almost all hourly frames, we have a strong overbought conditions. So the 4-hour frame is RSI at 82, which is very, very high, and a pullback tomorrow is expected. So, however, the most critical candle to watch tomorrow would be the weekly one. If it closes above this the green line, and this is a high of the red candle, 295615. If there is a closure about this one, so I think mistake, 295615. So if it closes above this level, then we're going to have a bullish reversal. So this bearish engulfing candle will be negated entirely, and we would be looking for higher highs. However, gold needs to close above this candle. Now let's move on to the next one. This is the chart. So technically the move today, it made an all-time high, and it invalidated both red and blue counts, leaving only the green one intact. However, if you remember, I discussed the potential of a bigger ending diagonal yesterday, and it still remains on the table. So the very key level here to watch, and tomorrow it looks like we're going to have some pullback. This level, the high of the top of this very first wave, if this wave, the current wave, crosses below this, that's gonna be a diagonal forming or something, some other bearish formation. This is the level to watch. Now let's have a look at the bigger perspective. So that's what I discussed yesterday. So now we can officially scrap both blue and red counts and leave only with the potential green. And this, I'd like to emphasize one more time, that this wave doesn't look impulsive because of this particular structure. So this wave here is not an impulse and is not a motive wave. So ideally it could be only the beginning of a bigger diagonal here. And I already mentioned multiple times that this wave here, wave 3, marked as wave 3, is not an impulse either. So it has so many overlaps that I find it challenging to find a clear wave, clear impulse. Well, that's the perspective. Let's see how gold closes tomorrow. Tomorrow will be a very crucial moment for gold, especially from the weekly candle perspective and a few other technical elements. Now the final for gold, I'll discuss GLD. So this ETF is like close today with bullish candle, and the chances for a move higher from the candle's perspective are substantial. However, for the weekly closure, it needs to close above this green line in order to open a path forward. That's all about commodities section. Now before moving to the stock market, I'd like to have a look at the global perspective. So what is happening right now with major indices around the globe? Tomorrow is the final day of the week, and this is where they are sitting right now. So far, China, A50 and Hang Seng, they are somewhat neutral, and we would need to see a candle closure tomorrow in order to make any call. Nifty is also neutral, but with strong bearish influence from the bigger frames. TSX Canadian, if it closes like this, it will be a reversal and it will be a bearish continuation candle. Australia, it looks like nothing gonna help here. So the index is moving down, and if you watched yesterday's video where I discussed the potential for the ASX, so far it is aligned. FTSE closure like this will confirm a bearish reversal on the weekly frame. Japan Nikkei is bearish so far, and French index is bearish. If it closes like this, it will be a huge tower top below a very important support level. Now let's move on to the US market. What we are seeing here, not much to discuss. Everything closed with bearish candles, and I'd like to emphasize just a few technical signals here. S&P500 is about to form a 50 over 100 days moving average bearish death cross, and Dow Jones already did it by 3 basis points. And IWM or Russell, it's way ahead of other indices, and we will talk about Russell later on in a couple of charts. So from the weekly perspective, one member last week argued that this is not a 3 black crows formation. I said, well, let's wait for a week and we'll see. What I'm seeing here is a very strong move down following 3 black crows and the break below the 50 weeks moving average by both S&P 500 and Nasdaq. Dow Jones and Russell, as I said, it is way ahead. So it is already breaking the 100 days and 200 weeks and 200 weeks moving averages. So nothing bullish here. Now let's have a look at the Elliott wave charts. So this is the chart that we discussed way back. We discussed it way back in December saying that there is a chance for S&P 500 to form a diagonal of some sort. So this was the perspective, and it looks like it did. The only thing that concerns me right now that the entire wave that started in August 2024 could be a diagonal, a huge one. And there are a couple of reasons for that. I discussed them already before. So this is the perspective, and I would say that if this is wave 3 and some indices, some technical indicators are showing support for this, this would be a very big move, and this wave 3 could go way here. And I would say that 5120 is the next target for this critical move. Now speaking about smaller frame, this is the perspective. Yesterday we discussed a potential for a next lower low because this wave here was corrective, and we were expecting maybe it could make a little higher, but lower low in both scenarios would be on the table. This is exactly what it did. So there are chances for a continued move here. So this is wave 5, potentially wave 5 or 3, and it could be very strong and lengthy. So far, this wave already extended to lengths of wave 1. But we know that in some strong markets, this wave can extend to 2.618 or even 3 or even longer. But we are monitoring for the exit criteria for potential reversal candles. Now let's have a look at the bigger chart. So this chart was shared way back in January 11th when we said this is the target for the next move once this wave here confirms 5490. Today the index closed just 31 points above, and it's already approaching our target. So the chart remains unchanged, and this, if you can see here, there's a much bigger perspective for this downfall. That's what Elliott waves are telling us. Considering this is wave 1 of a super cycle, then this would be huge. However, if this is wave 3 and this is wave 4, we might see a reversal in a couple of months and the move higher. Now let's move on to the next chart, and these are daily sectors. The sectors, all of them closed with red candles, and I would say that only 2 utilities and energy are not strongly bearish, so they might be forming a bottom of some sort and be ready for a bounce tomorrow. However, the other ones are looking very bearish. And if we look at the weekly formations that the candles will be closing tomorrow, XLK technology is falling after 3 black crows. Consumer staples, a very strong bearish tower top. Industrials, financials, healthcare is forming a big tower top, by the way, and consumer discretionary, all are bearish, all on track for a very strong bearish formation. Again, utility and energy, they are somewhat neutral and depends on the closure tomorrow. If they do close with a green candle on the daily frame, then it would impact the weekly formation and we might see some bounce for these 2 sectors. However, they are very small in order to lift the entire market, especially if we have the technology with a weighted value about 30+%. Now let's have a look at the bigger companies. So what we are seeing here is a very similar formation bearish technically for Microsoft, Amazon, Apple. Apple is falling, and by the way, it is already in our target area that we discussed way back in the middle of February, saying that this would be the target. The only thing that I couldn't foresee this happening that fast. And if you're interested in our daily calls, you can check on our website investingangles.com. We are providing some daily calls and for daily trading, and only for $10 you can get access to our private Discord room and the charts that we are posting on our website. So this is the weekly perspective. So far it looks like Tesla is falling below the two major lines, which is 100 and 200 weeks moving averages, and if it closes like this, well, a continued move is almost guaranteed. Meta is bearish. Nvidia is trying to form a bottom on the weekly frame, but this candle is not sufficient. It needs a much stronger move. Let's see how it closes tomorrow. Google is bearish, and Berkshire is right now flirting with between the bearish and bullish path. So this line, we need to calculate it exactly, like a midpoint of this candle. Closure above this midpoint would be bullish, but a closure below would be bearish. Let's see how it closes tomorrow, and I will discuss it in our weekly digest. Now let's move on to Nasdaq. Nothing surprising here. The chart that we shared yesterday remains the same, remains intact, and this is one that we shared back in February. So far it is following the path, and I'm also looking for this particular alternative count. So this would be one wave, 2, 3, 4, and 5, and if this happens, this might be wave 3, and in this case we would move all the tops and the other waves downward. Well, that's an alternative count, and I'm keeping an eye on it. Now let's move to Russell, the final chart of the indices today. What we are seeing here is that Russell is falling, and this is our favorite chart, as we discussed way back in January, saying that Russell is dangerously close to reversal, and this is exactly what happened. This chart is 2 months, has 2 months candles. That's why it is moving very slowly, but it looks like that the last couple of days really re-energized the move. So this was on February 22nd. We shared the same chart, nothing changed here, and now it is falling, almost reaching our target for wave 4, or potentially wave A of a bigger correction. Let's see how it goes, and we will talk about it in our weekly analysis for Russell at a micro level. And finally today we have two special features. First is Amazon, and another is Baba. Amazon is falling, and there is a good chance, at least I'm seeing it, that this wave is close to the end, the very first one that we talked about in February 4th, saying that Amazon is close to completing an ending diagonal. So it did, and it is falling. It fell way below the original level of the origin of the diagonal. Now, if this wave may be a little lower here, I would be looking for either wave A or 1 as complete, and we might be seeing a bounce here for either wave 2 or B, and it might take a couple of weeks, if not months. But this is not confirmed yet, so the chances this wave can get extended lower. And what we are seeing on technical side, First of all, the weekly frame is turning bearish, strongly bearish, and we have a freshly made 8x20 EMA bearish cross on the weekly frame. Well, it still needs a confirmation tomorrow. Let's see if Amazon holds it. And this one is just happened. This is a 15-day frame, MACD bearish cross of a record magnitude. So the next 17 days would be crucial for Amazon to complete this one and see what would be the next one. I'd like to emphasize that Amazon is not as aggressive as the other big stocks, and I would like to point to this formation. So technically it had a cross here also in February 2021. However, it moved horizontally for a year before we started to see some decline in prices. So maybe it will be somewhat similar here. I don't know. Amazon is a very strong company, and let's see what kind of wave and what kind of candles it will produce. So far, this is also a possibility. While we can have a decline, we might also see a horizontal move for a year or even more. And speaking about the long-term chart, this was the one that we shared on February 4th, calling the bottom with a great precision, I would say. So we made a call on when Amazon was 244, 242, and right now it's already lost 20%. And the wave is not wrapped yet. So we might see some stronger moves. So this was the original call on February 4th, just 5 weeks ago, and the 20% loss. I hope that those who listen to these calls are well prepared and they position themselves on the right side of the market. Now let's do a little exploratory moves for BABA. So what is happening right now? So I will say that I haven't been able to completely finish this one, and just some early evaluation, and I'm planning to post this one on our website later on, either today or over the weekend. So what we are seeing here, so let's start with candles. So this is the candles, and potentially what is happening right now is that this build-up of the candles, and this is a concerning one because for 3 weeks BABA wasn't able to move above this big green candle, and this is a very concerning development, especially if we consider that it's strongly overbought on the weekly frame, and it looks like it's losing momentum here. So if we see a strong bearish candle, let's say in the next week or two, I would consider this potential as somewhat similar to this one. This is the technical perspective. And if we look at the Elliott wave perspective, that's even more concerning, because first of all, I'd like to say that this wave downward here was impulsive. This wave 1, 2, 3, 4, and 5. This was potential impulse, and we know that impulses, corrections are never consist of a single impulse. So this entire wave here, not this one. So the entire wave here that BABA formed since the end of year 2022 could be a corrective wave, and I am talking about this potential A, B, C of a bigger wave B. Let's say if this is wave, this was wave A for the correction, this was a big wave. Okay, so this is wave A. Let me change it to different color. Okay, wave A. This was a wave A, and this would be wave B, potentially wave B. So far, this wave B is 1.272 of the length of wave A, which is a nice, very nice ratio for this corrective wave. And in this case, I would be looking for wave C here, but obviously it would be not an impulse, but most likely a diagonal or some sort. And another thing that I would like to emphasize here, that this particular, first of all, the wave that I marked here as wave A, it is not exactly an impulse, and there is a chance that this is just a corrective wave. Which we have a corrective wave, another corrective wave, and this wave right now that is forming is a very strong, potentially ending diagonal. So this would be wave, this one going through this one. This is wave C of B, and this could be an ending diagonal. If we break it into, this would be 1, 2, wave 3, wave 4, and wave 5. That's the perspective right now. And if we see, I'd like to emphasize, if we see a very strong bearish candle on the weekly frame or bigger, I would say the perspective here is fairly strong bearish perspective. And in our case, we would move here to the level of origin of the diagonal, which is 66.63. Let me make a line here. So it would be 66, 60, 63. That's the perspective. That's the perspective target. And this could be a very sharp move here. So if it, I would say in just a couple of weeks, everything will be done. But also it can move lower. In general, we would be looking, if you remember, this is an ABC formation, potentially wave C in this case could be a very sharp and strong impulse down. However, it could be kind of short, and we would be only looking, and we would be only measuring it once it is done. So that's the perspective right now. That's a ballpark estimate, and I would like to emphasize that this is a very rough calculation right now. And many conditions must be met. If we see a strong move, we'll definitely give a shout and flag it. So, to summarize, today's analysis covered critical market signals. Volatility is climbing, bonds making big moves, oil is sliding, and gold pushing limits. With key sectors closing the week tomorrow, the next 24 hours could define the upcoming trend. Will S&P 500 and Nasdaq confirm a larger shift? Is gold's run sustainable, or are we looking at a peak? Are Amazon and Alibaba setting up for their next major moves? Markets are moving fast, and we are tracking every signal. What's your biggest takeaway from today's analysis? Comment below and let's discuss. Stay tuned for the next daily market waves update, and as always, happy trading.